Hi guys, my name's Colin and this is Colin Talks Crypto. Well, the SEC has breaking news as of today, December 18th, 2019. They propose to update the accredited investor definition to increase access to investments. Let's see, how does this relate to crypto? Thank you for joining me. So traditionally, accredited investors have very strict requirements, not to mention the least of which is having a lot of money. And they have just proposed a revision to this. And you can see here for immediate release 2019, this is December 18th. The SEC voted to propose amendments to the definition of accredited investor, one of the principal tests for who is eligible to participate in our private capital markets. The proposal seeks to update and improve the definition to more effectively identify institutional and individual investors that have the knowledge and expertise to participate in our private capital markets. Now, I'm going to just take a moment here to note the fact that while this is very great, this is an improvement. They are obviously seeking to broaden the definition with which they include people, but still, this is a very much permission-based system, and we can do so much better than this. They are so far behind still, speaking from the crypto world. In the crypto world, if you have $1, you can buy some crypto. You do not need $5 million, as we'll see later in this article, and there are other requirements. So it's good, and it's still not good enough. Good job for opening the restrictions up and making it easier for people, and maybe we can reduce some of the wealth gap, but honestly, they're still in the Stone Age. I think they should have done this 20 years ago, and today they should be embracing crypto is what they should be announcing. They go on to explain here, the current test for individual accredited investor status takes a binary approach to who does and does not qualify based on a person's income or net worth only. Modernization of this approach is long overdue. The proposal would add additional means for individuals to qualify to participate in our private capital markets based on established, clear measures of financial sophistication. I am also pleased that the proposal specifically recognizes that certain organizations, such as Indian tribal governments, should not be restricted from participating in our private capital markets. Isn't that sweet? They're giving permission to more people to participate in the open and what should be free economy. But again, it is better than what it was before. So the public comment period will remain open for 60 days following publication in the Federal Register. So it's not active yet. It's a proposal to change things. And here are all the facts and the updates in the background. And in the highlights section here, you can see what are the proposed amendments. And so it says, the proposed amendments to the accredited investor definition would add new categories of natural persons based on professional knowledge, experience, or certifications. The proposed amendments would also add new categories of entities, including a catch-all category for any entity owning in excess of $5 million in investments. Gee, that's all you need, guys, is $5 million. They've really lowered the bar here. In particular, the proposed amendments to the accredited investor definition would add new categories to the definition that would permit natural persons to qualify as accredited investors based on certain professional certifications and designations. So if you have a certain certificate professionally, then you may be given a grant to participate in the markets. It's such silliness. I'm sorry. The other things they do is if you have a private fund, they add a new category based on a person's statuses as a knowledgeable employee of the fund, and then that gives you access. Also, limited liability LLCs that meet certain conditions are now able to qualify as accredited investors. Another one, Indian tribes that have in excess of $5 million and it was not formed for the specific purpose of investing may be qualified. Family offices with at least $5 million in assets. I'm noticing a pattern here. And lastly, the term spousal equivalent. I guess that's your significant other. If you together can pool your finances for the purpose of qualifying, let me guess, $5 million. So great, good job, they improved it. But as far as the bigger picture, if this is the best the SEC can do to keep up, I am just not impressed at all. You know, I guess I should be a little more supportive because it is in best interest of future ETFs and crypto-based assets that are traded on open exchanges in the stock market to enable more and more people to get in. So at least this reduces it down to 5 million, I think, but I would much rather see it open to anyone. I guess this is good for crypto because it's enabling more people to jump on board, and that's awesome. But I would love to see it open to everyone, a truly free market, not a system that enable the rich to get more rich. It's just ridiculous. Crypto, like I said, if you have $1, $5, $10, $100, you can buy some crypto. And projects like ICOs are open to everyone from the ground floor very often. And you can get in at the same time as the billionaires who typically have preferential treatment. All right, guys, I think you get the gist of this. Thanks very much, and have a great day.
I got a voice, we got a voice, you got a choice, I got a choice, we got a choice, you got a voice, I got a voice, we got a voice, you got a choice, I got a choice, we got a choice.